like to introduce Ryan Kreis. Ryan Kreis has been in the mortgage industry for over 15 years and is the co-founder and CEO of Reverse Mortgage Educators Incorporated. Reverse Mortgage Educators consists of a team of professionals who provide information to customers and real estate agents about reverse mortgage. There are many ways to use a reverse mortgage, but the education of the product is very important for customers and agents to know. Reverse Mortgage Educators Incorporated created a program to help customers and agents better understand the benefits of a reverse mortgage can provide to their lifestyle. An agent can step in and help homeowners purchase a better home for them without bringing on more financial burden in their daily lives. Likewise, agents who understand the reverse mortgage are able to assist the families of those who have one as well. Ryan Kreis teaches these education seminars for real estate agents all across California. Let's give a warm welcome to our guest speaker, Ryan Kreis.
All right. See how we do with our microphone. We're turned on. Good. Okay. Thank you. Welcome to everybody out there in Zoom land. Let's make sure we get my presentation running. And we'll get going. All right. So welcome, everybody. This is your sales in reverse, or listings in reverse, I'd say. So what we're going to do today is not necessarily cover just how reverse mortgages work. What I want to cover is how reverse mortgages help a realtor's business. So that means quite a few things, of course, how you guys interact with clients that ask about the question, what is a reverse mortgage? What's happened to the product today? Because inflation has changed our product quite a bit. That's actually turned it into something that I see agents being more interactive with. And yeah, we'll review how reverse mortgages work. So I think what I want to start off with is talking about what happens with you out in the wild when you're with clients and they ask about a reverse mortgage. Let's find out what that really means. So when a client is asking, what is a reverse mortgage? Okay, I can tell you that specifically, they probably don't want a reverse mortgage. They're asking that question for a different reason. Usually a client is asking about a reverse mortgage because they've heard about it. Someone has said, oh, if you get a reverse mortgage, you don't have to make a payment. Oh, I saw a commercial. It says if I get a reverse mortgage, I'll get money out of my house and I can still keep my house. So what they're talking about is the benefits of a reverse mortgage, but they really don't understand what the reverse mortgage is. What they want are the benefits of it. So when someone is asking about a reverse mortgage, it doesn't mean they've already thought about it and they say, I want a reverse mortgage. They're a homeowner that is trying to increase their cash flow. They're a homeowner that's saying, I still want to own a home, but I need more money. Now, I've heard a reverse mortgage can do that, so I guess I'll ask about that. But my underlying problem is I'm a homeowner and I want access to more cash. So I just want you to think about that so that when a client asks that question, you know they're really telling you something different than what they're saying. Now, let's talk about what's happening with reverse mortgages today in terms of inflation and interest rates. So when interest rates go up, as you know, a regular loan, well, a payment gets higher. Maybe people start borrowing less money because they're thinking, oh man, it's more expensive to get a loan. So when interest rates go up with regular loans, it's usually associated with the payment going up. With a reverse mortgage, when people are asking about our loans and interest rates are up, what happens with our loans is you don't have to make a payment, and we'll learn about that. So it affects them with the reverse mortgage in that we lower our loan amounts. And I'll go through a slide coming up to show you just how much our loan amounts have gone down. But our loan amounts have probably gone down on the magnitude of 10 to 20%. So a lot of individuals that were looking to get a reverse mortgage to get a certain amount of cash, or maybe they had a pretty big loan to pay off, are finding that it's more difficult to get a reverse mortgage. So right now, and this number is actually probably a little high, but probably about 30% of the people that want a reverse mortgage can actually get one. The other 60, 70% probably can't get a reverse mortgage because maybe they can't get enough money. Maybe they owe too much on their house and we can't get them enough. So the tables have really turned. A year and a half ago, I was almost the other direction, and that I could probably get 60% of the people to 70% of the people that wanted a reverse mortgage, I could give them enough money. So we have completely done a 180 in our industry to where now more people that might be asking you about a reverse mortgage actually may not be able to get one. And that's important for you all to know. Because these individuals that may have been asking about a reverse mortgage that a year and a half ago probably would have had that solution for them are now saying, oh man, the reverse mortgage might not work. So what else can I do? And for many of them, that may be they need to sell the home. And so I'm spending more time than I have in my last 15 years talking to homeowners about maybe you might have to look for different housing. The reverse mortgage isn't handling as many people as it used to. And so that's why it's very important as a realtor for you all to know that when someone asks the question or is talking about a reverse mortgage, maybe you need to tune them in a little more, have more of a vested interest in this situation, because it may be something that is going to come back to you as a person that needs to do something with their home other than a loan. And we'll get into all that coming up. Now, we have this thing called a reverse mortgage. Traditionally, it was used for a client to refinance a home. They said, I want to stay in my home, I want to get some money out, and maybe, oh, I don't have to make a mortgage payment. Okay, I want to know about that. Well, nowadays, we're seeing more people say, well, Ryan, if a refinance reverse mortgage isn't going to work, what else can I do? And I would respond by saying, well, we have a tool that you can use to buy a home. So just because maybe a reverse mortgage isn't the ideal solution for you to stay in your home, we have a way for you to still be a homeowner, have extra money, and not make a mortgage payment. We just have to find you a different home to do it with, typically a lower priced home. So we'll go through an example of an individual that ends up selling their home, but uses a reverse mortgage to buy their next home. And the reason why that is something that I'm seeing more of in using a reverse mortgage to buy a home is that we can actually get people loans these days. Here you go. You're welcome. So with regular financing, as you can imagine, qualifying is becoming a little difficult, right? Because you got a much bigger payment you got to qualify for. And so when you're someone that's on a fixed income, which a lot of our older homeowners are, that increase in interest rates has made getting a regular loan very difficult because the qualifications are twice what they were before for income. And if you're retired on a fixed income, you're pretty much saying, oh, I guess I'm out of the, I can't really think about selling a home and buying a new home because getting a new mortgage is going to be very cumbersome. The payment's going to be higher than what I have now. I have to worry about qualifying for it. So maybe I'm not going to be able to move at all. So the idea with the reverse purchase loan is we qualify totally different. We give people the opportunity to still be able to get a loan to buy a home. It's with the reverse purchase loan. And we'll go into that coming up. Okay, finally for you all as realtors. You're talking to a homeowner and they say, I have a reverse mortgage. Does that kind of give you the idea that maybe, oh, this isn't a client that I'm going to be working with in the near future? You ever think that somebody has a reverse mortgage might not need a realtor, right? Is that kind of in the back of your mind a little bit? Well, I can tell you that we actually need realtors to interact with clients that have reverse mortgages because there's two ways that you're getting business from this. One of them naturally is somebody passes away with a reverse mortgage, the heirs can inherit that home. And in my experience, 80 to 90% of those heirs sell the home. So you'd want to know who those are so you can perhaps get that listing. But there's something else that's going on these days that I just never really saw much of in the last 15 years. And that is people with reverse mortgages are finding they need to sell their homes. Why would you need to sell your home if you have a home with no mortgage payment? Well, we'll learn all about that coming up. But the idea is that for many, many years, interest rates have been very low. Housing prices have been very good. And people that have reverse mortgages can actually refinance the reverse mortgage to get more money out. And so just because you have a reverse mortgage doesn't mean that you can't refinance. And so over the last 6 or 7 years, people have been refinancing a lot. And they've had lots of access to the cash in their home. Well, what has happened recently? Interest rates have gone up and refinances aren't really happening much anymore, right? For regular loans and reverse mortgages. So for a lot of our older homeowners that got very used to being able to get money out of the house, they're finding I can't get any more money out of the house. And I got very used to being able to get money out of my house. It's worth a lot of money. And so people with reverse mortgages are actually saying, even though I don't have a mortgage payment, I still might need to sell my home to downsize to get access to more money. So these 3 items here that I put up on the board, these are things that involve realtors and reverse mortgages, not just loan people. Okay, go ahead, take that. That's your wife. You better answer that. I won't get in the way of that. So 3 things that are helping realtors with reverse mortgages right now. Number 1, when a client is asking about it or you hear people talking about it, you have to automatically know. Less people are able to get them than ever before. So you have to stay in that conversation to see if they might need help doing something like selling their home instead of getting a reverse. Number 2, we have reverse purchase loans. We're going to go into a whole nother slide with that coming up. And number 3, people that have reverse mortgages still need realtors. Sometimes it's their heirs. Sometimes it's themselves that need to sell the home. And I want to help you position yourself to get those listings. All right, well, let's review ourselves real quick on what a reverse mortgage is. And you need a package back here? All right, so the whole idea with the reverse mortgage is not that you're doing anything really different than normal financing, okay? You're simply getting a loan. And that loan is like a regular loan for all intents and purposes. You're getting a loan to buy a home, or you're getting a loan to refinance a home. That's what we do with regular loans. And that's what we do with reverse mortgages. You're just borrowing money to buy a home or refinance a home. And when you use a regular loan, you borrow money, you get a statement, shows how much you owe, shows what the interest cost was, shows what your payment is. That's a regular loan. You send in the payment, next month you get a statement, shows how much you owe, shows what the payment is, and that's just what happens with the regular loan. Every month you're getting a statement that shows how much you owe, and you're sending a payment in. So with a reverse mortgage, you're doing the same thing. You're borrowing money, you get a statement. Statement shows how much you owe. It shows what the interest cost was for the month. Except that the reverse mortgage, you don't have to send in what the interest cost is. You can choose to send it in or not send it in. And if you decide to send it in, well, you really don't have a reverse mortgage. You sent in what the interest was. So your balance will stay the same for your statement next month. If you choose not to send the interest in, you've just created your reverse mortgage for that month. So when you get your statement next month, whatever the interest was you did not send in is simply added to your balance, and your balance has gone up. So let's say you borrowed $400,000 and the interest was $2,000 for the month. If you said, I'm going to exercise my right to have my reverse mortgage, I don't want to send that money in this month. Well, next month you'll owe $400 plus the $2,000, you owe $400 and $2,000. If you were to send the $2,000 in, you'd still owe $400,000. If you sent in $2,500, your balance would actually go down, much like a regular loan. So reverse mortgage, all we're really doing is we're lending money. We're putting a lien on title. We're not taking ownership. It's not our home. And every month we're giving you the option of how you want your loan to run. If you decide to make a payment, we don't care. If you decide not to make a payment, we don't care. We just keep track of what you did or did not send in and send you the corresponding statement the next month. So that's all a reverse mortgage really does, is give somebody an opportunity to decide how they want their loan to run. So a client might say, okay, Ryan, I've used a reverse mortgage to buy a home. You've loaned me $400,000. I got my statement. I showed $2,000 was the interest. I didn't send it in. So next month, my balance is $402,000. And I just keep doing that every month. And let's say I got my reverse mortgage when I was 62 years old. And let's say I lived to 102. Is there any point in time when you will tell me I've missed too many payments, that my balance is too high, I mean, if you get a loan at 62 and you don't make a payment till you're 102, that's 40 years times 12 months. That's 480 payments times $2,000. What's my math? That's $960,000 that you would have paid if you were on it, a different kind of loan. But we've said we don't care. So you've amassed a ton of interest. And what if the house is worth less than what that interest is? Are you ever in jeopardy of us saying, you're upside down? You've lived too long. Interest rates are too high. And the answer is no. The idea for the reverse is it's for your lifetime. Okay? As long as you live, as long as you can figure out how to live. Okay? Maybe you're like, I'm going to live so long that the reverse mortgage company is going to be sorry that they ever made this deal with me. I'm going to live to be 140 years old just so I can teach them a lesson. Are we ever going to say, you live too long? What do you think? Yes? Actually, we will. I tricked you. But it's 150 years old currently. If you live to be 150 with reverse mortgage, we will say it's time to get a new loan. Kind of silly, right? But the idea is that we've extended the time frame for you to live so long that no one has ever reached that point yet. Nobody's lived to 150 that I know of. And no one's lived to 150 with a reverse mortgage. I'm pretty sure of that. Maybe one day. But until then, you can just continue on getting your statement every month, not sending in the money, watching your balance go up a little bit every month, and just do it as long as you want to. Okay? We are just waiting, right? We're like, man, when are they going to pass away? Right? When are they going to get a new mortgage? When are they going to sell the house? Because we don't collect any interest if you don't make a payment until the loan is either paid off through a refinance, or maybe the client dies and the heirs sell the house. Then we get all that money back. And that's where I've had some clients say, Ryan, how do you make money if you're going to wait so long? And the answer is we have to wait so long. We have to wait until that loan gets paid back for our industry to finally collect a check. But that's the deal we make. Okay? So for now, it's for your lifetime. So here's a big deal with our loans. Okay? I used to think when I got in the business that maybe people wanted reverse mortgages. Okay? I learned very differently. People wanted reverse mortgages not because they wanted a reverse mortgage, because they were in a situation where they're saying, I think this is the only loan that's going to work. I'm not qualifying for any other loans, so I'll call you, Ryan. Ryan, I want a reverse mortgage. You do? Oh, cool. I didn't know anybody really wanted one. Well, I don't really want one, Ryan. The problem is I can't get any other loans that work. Oh, okay. Well, at least I'm here for you. We qualify totally different than regular loans. We give people the opportunity to get financing to buy homes or refinance homes. Well, maybe they can't get anything else. And that's an important part of our business. It doesn't hurt my feelings that nobody loves reverse mortgages. Okay. That doesn't hurt my feelings, maybe a little bit. But I'm really glad that I have a tool to help people still be able to be homeowners and maybe do so on an income that wouldn't let them do it with the regular loan. Because the whole idea with our loans is that we are really equity-based. As long as there's enough equity in the home, which means that when you do a loan and you're not going to make a payment, will there be enough equity to be able to pay me back one day? Your balance is going up. Who knows what the real estate market is doing? We're hoping there's enough equity to pay us back one day. Or if you're buying a home, we want you to put a big enough down payment down so there's equity in there to handle the payments you're not going to make because the interest will add up. And so that's why we are slightly easier sometimes to get a loan, because we're not relying on someone to make a payment every month for us to feel secure and get paid back. We're relying on the fact that we've done our math and that you won't run out of equity. Okay? What do we think is enough equity? Well, we basically think everyone's going to die between 89 to 92 years old. Okay? That's our expectancy tables. So if you live past that, well, then you've won, perhaps. We hope the equity is there. But we're never going to come back and say, hey, you lived too long. You owe us money. Curse you for living so long. We take that risk. Or I should say, in many cases, FHA takes that risk. because our loan's insured by the federal government, by FHA, by the FHA, Federal Housing Administration, is insuring most of these loans that if things do go wrong, maybe property values drop, we go into a housing recession. We as a lender are saying, FHA, just pay us because you're insuring the loan, okay? So FHA has a lot to do with how much we lend because their butts basically are on the line, okay? And back when we had that little housing, I shouldn't say little, we had that big housing recession in 2008, 9, 10, FHA paid out billions in insurance claims to lenders because we were lending so much on reverse mortgages that the houses were upside down. And we couldn't go to the heirs and say, hey, you owe us money. We couldn't go to the people, especially ones that had passed away. We couldn't go to their estate. And so FHA made a lot of checks out to lenders to cover those losses. So that's how this whole thing works. We can lend money even when the income is not there because we're hoping there's enough equity. FHA is hoping there's enough equity to be there to cover any losses. And so that's why we lend like we do. And that's why we're a little easier on qualifying. Since we don't expect anybody to make a monthly mortgage payment, then we're going to qualify an income differently. So we'll talk more about that coming up. Okay, so this is what I'm seeing more of than ever. Realtors, you send clients to call guys like me. We run advertising. Wherever it is, we get these calls from these clients. Ryan, I want a reverse mortgage. I'm like, you do? Ah, you're talking to the right guy. How old are you? I ask how old they are because I lend money based on age. Okay? If you are 62 years old or you're 110 years old, who do you think might have die first? 110? Okay, that's a pretty good guess. So if I lend somebody that's 110 years old money, am I worried about them missing a lot of payments or not making a lot of payments? Not really, right? Because it's 110. A 62-year-old, I'm like, dude, you're going to live a long time. You're going to miss a lot of payments. So I'm willing to lend more money to the person that's older because I'm less worried about them missing payments and the house going upside down. So I always ask how old somebody is because that's how I determine how much I'm going to lend them. I take their age into consideration. I take the value of their home, and I take interest rates, and I decide how much to lend somebody. So right now, interest rates are much higher than they were. I'm not going to say they're high because compared to what? History? Maybe they're not, but they're much higher than they were, which means our charts have changed dramatically, like I mentioned in the beginning of class. So a homeowner, let's say a homeowner who is 75 years old, had talked to me 2 years ago and said, Ryan, I want to borrow money. I'd say, here's how much you can get. And maybe they said, okay, that's pretty good. I think I'll wait a couple years. And then call me back and I tell them now. And they're like, whoa, that's a lot less. Like, well, you should have waited. You should have done it right away. And they say, well, that's not enough. These are actually real conversations I'm having all the time right now. Remember, like 70% of the people that call in, I'm usually telling them a loan amount that's not satisfactory for them. And so they're saying, well, what else can I do, Ryan? What other kind of loans do you have? I'm like, well, if you're calling me, you've probably checked out most loans. I'm sure 30-year fix isn't going to work for you at 7.5%. So that's not going to work. There's hard money. Well, that's only going to work maybe. No, not at all. It's expensive. Too high a rate. It's short term, right? So really, after I've told them that the finance is going to work, that's when they really start down the road of what am I really going to do here? And so I have more homeowners now than ever saying, I just might have to sell. I might have to sell even though I don't want to, because I really need to get to some of that equity to help my retirement out. So we'll talk about how they can sell and rebuy with the reverse coming up. So let's say a client calls in and they can get a refinance, right? Let's say Ryan, I'm 75 years old. I have a house that's worth $1 million and I owe $300,000. Okay, based on your age, interest rates, the value of your house, I can lend you $450,000. And they say, okay, that's pretty good. I owe $300. You'll lend me $450. Let's make a deal. I say, okay. The first thing I need to do to give you a loan is I got to pay off whatever you owe on title. So whether you have a mortgage or liens or whatever else, we'll clear those off. In this client's case, it's $300,000. Okay. I gave you 450. We paid 300 to your old lender. They're gone. And now you have 150 left. What would you like to do with that? Well, I don't really want that right now. I just want to get my first mortgage paid off. Okay. Well, you can leave that 150 behind and we put it on a guaranteed line of credit, which means you can access it anytime you want in the future. Guaranteed. Even if your house value goes down. Guaranteed. Never gets frozen. Okay. I'll do that. Maybe somebody might say, Ryan, can I get half of that right now? Sure. We'll give you a portion now and then leave the rest on the line of credit. So in other words, when you're getting a reverse mortgage to refinance, a lot of reverse mortgages are set up where it's like an equity line product. You take what you need right now and the rest you can get later. Whatever you use, that's what the interest is. So if you've borrowed 300, but you left 150 behind, when you get your statement, it shows you borrowed 300 from me. The interest for this month is $2,000. And that's the reverse side, right? If you don't pay me, I don't care. Next month, you'll owe 302. Meanwhile, on the other side, it shows you have 150 available. You're not being charged for that. It's just sitting there waiting for you, okay? And if you get the FHA-style reverse mortgage, which I'll delineate that a little bit later on, but the FHA-style reverse mortgage says this 150 over here, as a reward for you having that and not using it, they will actually grow that 150,000. So your first statement might show you borrowed 300, you have 150 available on your line of credit. Your second statement, let's say you didn't send a payment in. You owe 302 on this side. But over here on this side, you don't have 150 available. You might have 151. Whatever interest rate you're being charged on the money you borrowed, FHA allows you to grow the available funds on the other side by the same interest rate. Yeah, it's kind of cool, right? And it doesn't matter what's happening with the housing market, by the way. If you're paying interest on the money you borrowed, you'll get the interest growth on the line of credit, even if the value is going down. So some people like that. They say, oh, that sounds pretty good. Maybe I don't owe anything on my house, so you're just going to give me a big line of credit to start out with, and that'll grow a lot every month. I'd say, well, some might even say that makes me a very smart investment person. I'm going to beat Wall Street with that. I'd say, not really, because even though you are growing how much you can get out, it's your equity you're getting out. So it's nice to have that money there, but you are no investment genius, okay? Because you're not making money, you're just allowing to get more of your own money to access. Make sense? But that's how a refinance works. All right. So before I pop off this, I'll just kind of recap. What is a reverse mortgage? It's simply a loan. You've just borrowed money from me. I put a lien on your house. That's it. The only thing I want one day is to get paid back whatever money we've loaned. Plus, if you're not making interest payments, well, you're going to pay me back more because you decided not to pay the interest. But at no point in time am I ever saying, oh, you owe too much. At no point in time am I saying, hey, I've taken title of the house and you owe too. None of those things happen. You've just decided to take a loan where if you decide every month, I don't want to make a payment, or you decide what you want to do, we'll notate it. We'll send you a statement so you know where you're at. And we just keep on going. And we keep on going. As long as you're living in that house, we keep on going. You can pay it back anytime. There's no prepayment penalties. You can do whatever you want. So let's just take a look. Back in 2021, right? Somebody calls me up. They say, Ryan, I'm 75 years old and the house worth $950. 2021 was about when rates were rock bottom in the beginning, okay? We were at the tail end of the COVID situation, which means rates were still low, but then the Fed said, uh-oh, we've kept rates too low for too long. We're going to start getting these rates high. So right around the beginning of 2001, if I remember correctly, is when rates were very low. So this client calls me at the right time. He says, I'm 75. They say my house is worth $950. How much can I get? I'm like, oh, probably about $559,000. And they'd say, oh, I owe $425 on my house, so we'll pay that off. And then I'll give them $134, which they can put on a line of credit. So they said, that's pretty good. I'm happy with that. Now, this person, maybe their neighbor, said, you know what, I'm not ready to do that, Ryan, but thanks for telling me what my numbers are. And then they call me back right now. And they say, Ryan, can I get that $559,000 loan now you told me about 2 years ago? And what I say to them, sorry, Interest rates are up. My loan amounts have gone down. By how much? Well, instead of giving you $559, I'm going to give you $391. Whoa. At that figure, if you owe $425, can I even do a loan for you? No, because remember, I got to pay off whatever you have on title. So this person owed $425. 2 years ago, I get him $559. Right now, I give him $391. Okay, what's that delta right there? It's like $160,000 or something like that, right? Yeah. So imagine that. For this 75-year-old, I'm giving $160,000 less, and now they can't get a reverse. Where 2 years ago, I would have given a reverse with $134,000. So you see why I say that there's a lot of people that are saying, whoa, I might have to do something different. Just by waiting 2 years, it changed me from somebody that was going to have a reverse, that was going to do a lot of cool things for me, to someone who's not getting one, and I might have to think about selling my house if I really need money. This is where I say I'm glad you're here today, because you all have to know, not everybody that's asking about a reverse is going to get one. Okay? Our loan volume for refinances in my industry, you want to see how sad I am? Our volume has dried up by 50% from the refinances. Okay? And guess what's going to kick in? Reverse purchase loans. Because for this client, so now I have a client here. You sent me a client, and I've said, sorry, Mrs. Smith, I can't get you a loan. She says, well, Ryan, what am I going to do then? Because this $425 is really starting to weigh on me. I'm tight on cash. Tell me you have something out there for me to help me. I'd say, as a matter of fact, I do. I'm going to talk to you about still being a homeowner, having money in your pocket, but we've got to do it in a different house. Oh, I don't want to do that, Ryan. I don't want to move. I'm like, no problem. Let's see what else I can do for you. Well, that loan doesn't work. That loan doesn't work. That doesn't work. Maybe you want to, I don't know, if you're retired, maybe you want to go back to work at 75. Maybe not. I don't want to do that. Maybe they could take some roommates in. So by the time we run through the options, a lot of them are good. And sometimes there's options that you think would be a no-brainer that they end up not doing because maybe their financial planner told them otherwise. I have a client I'm going out to see tomorrow that I've sat with a few times. She has investments. When I told her about the loan, she's like, maybe I'll start using my investments instead of getting a reverse mortgage. I said, okay. You could think about that, but talk to your tax guy and your financial planner about what happens when you start taking investments. You pay taxes, plus you use the return. You don't get the return on the money anymore. And so a lot of financial planners might say, maybe you should think about doing reverse mortgages because you get the money tax-free. So there's different things that can happen with these loans. And when we come to selling, this is one of those things where a client has to make this decision. So let's say we have the 74-year-old client, by the way, and she has said, okay, Ryan, that refinance obviously is not going to work. So I'll get my realtor out here. We'll sell this house. It's worth $950. Remember, I owe $425 from the last example. So after I sell the house and pay the $425 I owed, plus the cost of selling the house, title, escrow, sales fees, I now have $470. Okay? But I'm homeless, right? Because I had to sell my house. So my realtor has made me homeless. No, I'm joking, right? No, they have to move. But they still have no home and they have $470 cash in their pocket. So what are they going to do? Number one, they need to put some money in the bank because that's what they're trying to do with the reverse refinance. It's not working. They need to be able to buy a home. They got to be able to do a lot of things here. They're worried about qualifying for a regular loan. They're on a fixed income. So it would seem like they don't have a great situation here, right? But this is what they had to do. So they found a house for $600 somewhere. I have a lot of clients with realtors that we are working, and they're selling in LA, Orange County, San Diego, and moving to brand new houses wherever, Murrieta, okay, Temecula, okay, hour away. They're finding these new houses for $6,000. I tour these houses all the time, and a lot of people are moving there. I was in a brand new community in Hemet, which was a brand new community. I saw a lot of retired people walking in the door. Asked the realtor, who's buying these homes? She said, we have a lot of retirees that are selling from other places and moving here because the housing prices are lower. And so it makes the math work for them. So in this case, we have this client. They had $470,000 from the sale of their house. They found a home for $600,000 and they want to get financing. And I'd say, okay, let's talk about a reverse purchase. Based on your age of 74, I want you to put down $360. You have $470, so that works. I'm going to give you a loan for $240 based on your age and the purchase price. So the first thing we've done for the client is we've taken them from a situation where they had a payment on a house, where they had a $425,000 loan. They were making a payment not every month. 2, now they have a house where their payment is optional, and they have $110,000 in the bank they did not have before. So I'm going to say that's a pretty good turnaround. A lot of the clients that we do this with, they don't even touch the 110 for a long time because just getting rid of the mortgage payment has been a relief for them. Okay. The other benefit I see, well, at least for the people that are buying something new somewhere else, is they've gotten a lot of maintenance issues that are now gone. They're moving from houses that maybe were older to houses that are either fixed up or newer. So along the way, you do things to not only improve your financial situation, but hopefully you've done something to improve maybe your housing situation. So, reverse purchase. It's designed for these individuals that maybe are in houses where financing is not working because of the value of the house and what they owe. But when we get them to lower priced homes, the math starts working. So again, we're underwriting differently. We're not necessarily saying to someone because you have a 600 FICO score, you got to get a different interest rate, your payment's going to be higher. Okay? Unfortunately, that's the way regular loans work, right? Somebody that maybe had a hard time making payments on things and their FICO score is lower, now has to take a loan with a higher interest rate, which means it's harder for them to make a payment than someone else who can make, right? The system is set up for failure sometimes with regular loans. Individuals that maybe need more help trying to manage their budget because they have bad FICO scores, when they get a regular loan, they get higher interest rates. That's a bummer. So we don't do stuff like that with our loan. We don't care what FICO score you have, you're getting the same loan and same interest rate as other clients. And since you're not required to make a payment, that's helpful. How about if you're on fixed income? Regular loans are very concerned with people making payments. Oh, this person doesn't make that much money. They're going to miss a mortgage payment. And then that messes up our whole investment portfolio. We can't do that. With us, we're saying, look, we don't care if you don't make a payment. It's up to you. So you don't mess up anything when you don't make a payment with us. We don't care. That's what we're designed to do. We do need some income, though. We want to make sure you can afford to live in a home. You got to keep the heat on. Maybe not in California. You keep the air conditioning on in California, okay? Yeah, okay. You got to eat, right? You got to have water. You got to do these things. So we want some income. In general, we want to see that you have enough to pay your tax insurance, to have about $500 a month to eat and buy necessities and pay utilities, okay? So a lot of clients I'm seeing need income anywhere between $1,200 to $1,600 a month. Usually Social Security is helping people qualify. Usually it's what they need to qualify for a reverse mortgage, okay? And just straight Social Security would not usually work with regular loans for qualifying. So that's why we can be helpful in people getting loans. Okay, so the underwriting portion of it, what we're doing is we're saying, look, our biggest concern is somebody gets a reverse mortgage and then they don't pay their tax insurance, okay? Because we can't pay it for you. So that puts you into jeopardy of being foreclosed on. So our big deal is that we're looking for history. And we're looking for just enough income to pay the bare necessities. But let's say that you have a very bad history of paying your bills. Maybe you've been in foreclosure. Maybe you had tax defaults. Maybe you have lots of mortgage rates. Maybe you're in bankruptcy. Okay, that is trouble for regular loans. For us, it's a little bit of a nuisance, but we want to work through these problems, okay? FHA loans were manually underwritten, which means every loan is different. It's not automated, okay? If you're doing a regular 30-year fixed loan, you'd get put through something called DU, if you know what that is. It's Desktop Underwriter. It electronically underwrites for you. It doesn't really care what happened to you. The computer doesn't say, oh, you're not qualifying because you missed a mortgage payment. Tell me why you missed the mortgage payment. The computer doesn't do that. It's like you're out. But we do. We're like, man, you got a 550 FICO score and you're in bankruptcy. Can you tell me why you ended up here? because what we're concerned with is that you're going to make your tax insurance payment. So if you have a legitimate reason for those things happening, we're going to say, that makes sense. You tripped, you fell, dental work, something happened to your kid. Your house had a roof leak, you put a new roof on your house. I have a lady that has a bunch of plumbing issues right now. She's had to pay contractors all kinds of money. So she missed mortgage payments. Makes sense. FHA says that makes sense. You probably don't have your water main blow out every year. So it blew out on you. You had to get that fixed. You spent money. We understand. So we will now forget that you had that bad credit history. We will now treat you like everybody else. Oh, you went into bankruptcy because something happened and you had to file bankruptcy. Okay. We can get over that. If you're in chapter 13, okay. We'll see why you ended up there. Did you make all your payments on time once you're in bankruptcy? You did? Okay, good. We think that's good history for you. So we're trying to find reasons to give people loans, if you ask me. That's been my feeling. I think regular loans are looking to give reasons not to give loans. They put you in this machine. They're trying to find a reason not to lend you money. I'm trying to find a reason to lend you money. So I think it's always my feeling with us regular loans. I'm looking for bad things to happen to people. It's funny because somebody has poor history and things have gone wrong. And I'll ask them a question and they're afraid, like, ooh, which way do I answer this? I say, did something happen to you? And they don't know if they should say yes or no. And I'll be like, look, I just want you to know. I want you to tell me every problem you've ever had in the last 2 years. I don't care if you stubbed your toe and you went to the doctor. I need to know everything that's happened to you because I'm going to build the story to get past all of your bad credit. And that's how we get people loans. Now, let's say that we run across somebody who I just can't figure out. They have had nothing gone wrong. They've said, you know, Ryan, nothing has happened to me. I just spend too much money and I don't have enough to pay my bills at the end of the month. Well, that's not a great thing. And I'm like, okay, you miss mortgage payments and you're behind on your taxes just because you don't want to budget yourself. Is that right? Yeah, that's basically right. And I'm like, well, I can't really use that for an excuse. But our main concern is that you don't pay your tax and insurance, right? Because we don't want to have to foreclose on you. So we'll do something else for you. I will set up an impound account to pay your tax insurance for you. Hey, that sounds great. Except I'm not going to collect it from you every month because I don't have any system to collect payments every month for tax and insurance. So I have to do it a different way. I look to see how long you're going to live. Okay. If you're 72, you live to 90. If you're 62, let's see, 72, you live to 90. Hey, if you're a newborn baby, you live to 83. Why is that? A newborn baby lives a shorter lifespan than a 72-year-old. Does that make sense? Doesn't make sense, right? Well, you got to think about all the things that happen from you when you're a baby till you hit 72. All the different ways you could have something happen to you. So if you've made it to 72, you've actually gained life expectancy. So 72-year-old, I'm going to say, hey, you live to 90. I have to worry about your taxes getting paid until you're 90. And I'm not going to ask you to give me that payment every month. So instead, this is how I'll do this. I will, if you're buying a home, ask you to put down a much bigger chunk so I have something to pay your tax insurance with. You're putting down a bigger down payment, which gives you more equity when you buy the home, and I'll peel a little bit of that equity off every month to pay your tax insurance for you. Or if you're refinancing and you just don't qualify, I'm like, sorry, I can't get you qualified, but if I do an impound account, it's actually called a LISA, or life expectancy set aside. But instead of you getting $150,000 out in cash on your refinance, I'm going to give you 100 because we're going to leave that other 50 in equity to pay tax insurance for you. So now we start getting to the point where I can almost just about qualify anybody. But you have to submit to maybe having me pay your tax insurance, which means you're going to have less cash in your pocket. It's going to be equity in your home that I'm going to use to slowly pay your tax insurance for you. So this is how we get people qualified. This is how we take people who are just having a hard time and we can still get them loans. We have different tools at our disposal. Doesn't mean every single person is going to get it, but it means we have a very big brush to paint with. Okay, somebody wants to buy a house or refinance the reverse mortgage. Okay, the government wants to make sure they understand how the loan works. So they're not necessarily going to rely on us as loan officers to make sure we're doing an awesome job. They don't want to hope that every loan officer is the best loan officer ever, right? So instead, what they do is they have nonprofit companies that they've set up to go over the loan with the borrower. So before somebody can really start the process with me of doing a reverse mortgage, let's say, they would have to go to counseling. Means they can get on the phone with somebody who's been approved by the government as a nonprofit counselor, and that person will go over the loan with them. Do you understand that you're getting a loan? Just because you're not making a payment doesn't mean it's free. Your interest will add on over the years. You understand that? I do. Do you understand that you have to keep the home as your primary residence? Sure. Do you understand that unless you have set up that impound account called a life expectancy set aside, if you don't have that set up, you got to pay your own tax insurance. You understand that? I do. Okay, so they will just go through a series of questions with the client to make sure the client understands what they are getting and how to keep it. And then they'll issue a certificate. There's no pass or fail. They issue a certificate, says this person's been counseled. I shouldn't say there's no pass or fail, but it's relatively low that maybe the counselor gets on the phone with the borrower and decides this borrower is incompetent, like they don't even know what's going on. I mean, if a loan officer has sent someone like that to counseling, then the loan officer is obviously doesn't understand what's happening, because they will never make it through counseling, because the counselor will say, do you understand what I'm saying, Mr. Rodriguez? Do you understand that you're getting a loan? Mr. Rodriguez has to say, yes. Do you understand that you have to pay your tax insurance? He has to say, yes, I understand. So I suppose there's cases where the counselor would say, this person is not competent. They won't answer back. And then they would not get a certificate and they could not get a loan. Okay? Never happened to me, because I would never send anybody to counseling like that. But I suppose that is one safeguard that our industry has to try to make sure that individuals that are getting loans can get the loan. That's why they also don't let the loan officer sit on a phone call, because the loan officer would say yes, say no, okay? Because I want to close a loan. Okay, so we can't let that happen. So they specifically ask the client, or they should be, is your loan officer sitting with you? Because we're not supposed to be there. Well, I suppose they could fib and the person's really there, but I mean, it's kind of one of those things where as a loan officer, you would never want something to come back where you were sitting there, because that jeopardizes your, listen, a family member could absolutely be telling them. Yeah, and I have to, that's upon us. So there's the checks and balances for us, or really the loan officer, number one, should be concerned that whoever is getting the loan is competent, because that puts them in jeopardy if a family member were to say one day, hey, you gave a loan to a incompetent person. So we are the first person that should stop that. Then the counselor should stop it if it's not happening, but they may not know. But then the notary, if you're sending a notary out and this person is being coached to sign, that notary should not go through with the signing. So there should be 3 checks and balances. Do people get loans when they shouldn't? Possibly. That's a question of, how much do you value your career, your licensing, everything else, because we need to stop that from happening. Yes, that's right. Third-party nonprofit. They have no skin in the game. They get paid like $130, $140 through the counseling, and that's how they make their money. All right, won't cover too much of the rules on a purchase, but realtors aren't supposed to give credits to cover like closing costs. The sellers aren't either. FHA really had in mind when someone is using a reverse mortgage and they're older and they're buying a home with a reverse mortgage, they want to make sure that client will buy the home, even if they have to not get credits or, I don't know, concessions. Like the seller says, oh, I won't replace the carpet. I'll give you $2,000 instead. They don't want that kind of stuff happening. They don't maybe want an older homeowner to be induced to buy something unless they'll buy it at face value, getting no credit. So they got to pay their half of closing costs and no credits to cover repairs or anything like that. All right. So again, this isn't like an underwriting class. I could sure spend a lot of time telling you how to get person qualified reverse, or how to write your contract right, and all those things, but that's not important. So what's important is that you just all know that if a client is asking about reverse mortgages, that you know that there's something going on with this client, that you understand there's a possibility you may have something different than a reverse mortgage on your hands. So don't worry about underwriting or questions. You can always call this number. I staff it 7 days a week. So you'll get an answer on this phone call 7 days a week. Mel, have you ever called on a Sunday and got an answer from us? Probably not, but you will now though. If you see, he will, because he likes to do that stuff. But anyways, the idea is that you guys can just get answer to questions or Any kind of questions you want, just by answering that, calling that number instead of trying to memorize a lot of things today. It's just an information line, if you will. All right, here is some basic facts about all of us getting older here in America, which is one thing for sure. We all are doing this together. But we do have a lot of people who are already of age to think about retirement, okay? A lot of boomers turning 65 years old every day. A lot of people still have their parents with us too. So if you looked at people 65 and older, this is the boomers, but we probably have about 100 million people over the age of 65 right now, which who cares that we have older people in America? Who cares? But you do care when you figure out that a lot of our older homeowners are on fixed incomes. And that creates a problem, like I've said, with qualifying for loans. Now, that doesn't mean that you don't have assets. We have a lot of wealthy people in America who couldn't qualify for a regular loan because they have a lot of their money in savings or in assets, and that doesn't help qualify for loans. So we see problems starting to emerge in our system of being able to get financing. Do you guys remember? Okay, so the housing recession, right, in 2009 and 10. Okay, you guys know who Bernanke is, right? He was the chief. He was the head of the Financial Reserve Board. You know, big guy, like, you know, head of the Financial Reserve Board. This is a guy who should be really wealthy, should never have a problem with money. Yet there was a funny thing that happened to him, that he couldn't get qualified to get a loan. The guy was probably worth hundreds of millions of dollars, but he didn't have enough regular income coming in to qualify for a loan that he wanted to buy a home. So I thought that was pretty funny, right? That goes to show you, even someone who's very wealthy may have a problem getting access to financing because they're all trying to hide their income. Nobody wants to have income because you pay taxes. Well, then you can't get loans. So that's, I don't think I'll ever do a reverse mortgage for Chief Bernanke, but the idea is that there's a lot of people who would look to try to find a way to get financing even when their income is lower, okay? And this is something that somebody coined this, house rich, cash poor, I guess. It's because you may have a lot of money in equity, but your income, not so much, right? So we have like well, let me tell you the progression of this slide, which I haven't updated recently. But I first did this slide circa 2013, so that's like 9 years ago. And the amount of equity in our 65 and older homeowners, that they had in equity was 2 trillion. Then I think I did it again like in 2015 and went to like 6 trillion. This was 2020, it was 8 trillion. And then I just saw this figure a month ago. I haven't updated the slide, but you want to know how much equity we have in our 65-year and older homes? Any idea? 12, you're right. Did you see that? Or was that a good guess? Nice. Well, 12.1. So you're off. No, but yeah, 12 trillion is what we have. So yeah, hey man, that's a lot of equity, right, in our homes, okay? But I guarantee you this, our incomes have not gone up as much as our equity, okay? And so we have to figure out how to get to that equity. National Association of Realtors, right, NAR, you guys are familiar with them. You guys are part of them probably for now. For now. But they do a study every year of home buyers and home sellers. And I haven't checked it this year, but in past years, the #1 demographic of home sellers was, thank you, 55 and older. Yet if you were to ask the National Council on Aging, who also does studies, they would tell you that over 70% of the respondents said we're never moving from this house in retirement. Now, I know that's not directly correlated data, but there is still something interesting there. A tremendous amount of people saying we're never moving in retirement, yet the people that are moving are in retirement. I believe that's to get to some of the equity. I think they're saying, hey, we need to get to some of this equity. Yeah. So at the end of the day, whether you're selling a home, like NAR says they're doing, you're getting reverse mortgages, whatever you're doing, that 12 trillion is a lot to leave wrapped up in equity. And so getting to it nowadays, especially, I don't know. I mean, I still feel there's a little, in my business, in my experience, I still feel a little different shift in people's feeling towards their homes after COVID, where people were a little more interested in getting to some money and spending it instead of trying to keep it tucked away. That has been my experience. So are people selling homes to get that equity? I think so. I think so, especially nowadays. And as a matter of fact, I would encourage you all, I think it comes out maybe in February. Look at that National Association of Realtors study. It's on the website. I think as members, you get it for free. And let's see what it is next year. I believe it's going to be closer to 60% of the people selling homes right now are older homeowners. Okay. And if that's the case, well, I mean, you have an idea who's selling homes. So, yeah, right. I don't know that the 40-year-old is selling a house that's working a job that's got a 3% interest rate, right? You guys hear these figures to go get a 7.5% interest rate. We made a lot of permanent homeowners for a while. But when you're older and you get access to cash, I have clients who call up and they're like, Ryan, I want a reverse mortgage. I'm like, okay, cool. Let's talk about this. What kind of loan you got right now? I got a 2.5% 30-year fix. I'm like, you really want to get rid of that? They're like, Ryan, if I can't make a payment, I can't make a payment. It doesn't matter what interest rate I have. If I got to get to cash, I have to get to cash. I don't care that I got a great loan right now. I got over that when I realized I was tight on money and I stopped worrying about that loan and more about having cash. So maybe that plays into why we have so many 55 and older selling their home. All right. Slow. Okay, so I mentioned in the beginning of class, we have a lot of people with reverse mortgages right now, probably about 100,000 in California. I think about 54,000 have reverse mortgages in Southern California. So those houses are going to come to market one way or another. So if we have a reverse mortgage home where our borrowers have passed away and the heirs are saying, where does the house go, right? Well, we know that, well, we in the industry, us lenders, we just want our money back. I don't want the house. I don't care about your house. I just want the money I loaned you, plus any interest payment you didn't make. So however much that is, that's what I want to get paid back. So if you're an heir that's inheriting a home, and we have a house worth $950, and the client's owed $600 when they pass away, well, as an heir, you know that, number one, if I want to keep the home, I got to refinance. I inherited the home, but I can't take my parents' loan. I got to pay that reverse mortgage company off and get my own loan. So refinance and get your own loan. However you get money to us, we don't care. We just want to see 600,000 bucks show up when we send you the payoff demand. But as I mentioned at the beginning, at least in my experience, I see 80 to 90% is my estimation of heirs when they inherit these homes with reverse mortgages on them, they sell them. Okay. And a lot of times it's, one person, one kid wants the house, but they got to refinance. They can't do it. So they just end up saying, okay, let's get this house sold so we can split up whatever's left over. And in this case, and this is very round math, but let's just say the house is worth $950. The balance was $600. They sold the house and they have $350,000 left to split it up. Okay. So the options with the reverse mortgage when there's equity is basically like a regular loan. Heirs want the house, cool, get your own loan. Heirs, you don't want the house, put it on the market, sell it, pay the loan off. Whatever left over is yours. So that's basically like a regular loan. We'll get you, assuming you have your paperwork in order, you can get up to a year to make this happen. Okay, so heirs can get a year to sell the home. Now, that sounds pretty easy, right? Do you think most heirs have all their stuff in order? No. And if I were to look at the 100,000 reverse mortgages that are in place right now, and I were to pull up the title on them and look at it, I bet you in half of them, I would find a problem that the heir is going to have in getting that 12 months. And so this is where opportunity is for you all, which I'll talk about in a minute. A lot of messy titles out there. Let's say the house is upside down. So let's go back to 2009, 10, okay, when I was getting calls from heirs. And they're like, the house is upside down, parents have passed away. So I guess I just don't do anything, right? I can't get the house. Am I going to pay that upside down portion? Are they going to ask for the estate to pay it back, right? And we all know the answer is no. If it's upside down, FHA is going to pay for it. They're going to write a check. But so you have options here. What would you like to do? Sell it? Okay. Or how could you keep this house? It's $50,000 upside down. Would the lender want you to write a check for $50,000 so that way you could get the house because it's upside down? So Okay, I'm going to answer your question. Although you're 2 for 2, by the way. You're 100% for question and answers in the class today. You're doing very good. Yeah, we do have to pay off the balance, but how much do we have to pay? So the heirs are looking at this going, I want the house, but I'm not going to give you $750 for a house that's worth $700. So FHA says, okay, we're going to make you a deal. First of all, in order for this deal to happen, it has to be an FHA insured loan. She just came in that door and then she went out that door. Like, oh, okay. No, you can go very smooth. You want a folder? Okay, all right, there we go. That was like so smooth though, so quietly. That's all right. Very stealthy. Does anybody else need a folder? Mel, you don't get one, neither does Mindy. Oh, that's a thumbs down. You guys want folders? Mel? 2? Okay, all right. All right. So first of all, what we do when we're an heir and our parents have passed away, we need to get the statement and see how much they owed. So that way we can determine if we owe an upside down house or not. The only way you're going to know how much is owed on a reverse mortgage is not by looking at title. We have a fictitious number on our recorded documents. And so you can look at somebody that has a reverse mortgage, and let's say when they got the reverse mortgage, their house is worth $1 million. You know what we record the loan amount at? $1.5 million. Isn't that nice? How much do you owe? Maybe you just got set up with a line of credit and you haven't used any money and you owe 0 on your reverse mortgage, but we've recorded at $1.5 million. So you'll never know how much somebody owes on a reverse mortgage home by looking at title. The only way you'll know is get the statement. So heirs get the statement. They're like, oh, maybe it's the first case. They say, somebody told me the house was $950. My parents owed $600. I know I'm on the left-hand column here. I'm going to get my own loan, pay them off, and we're good to go. Maybe you're the heir in the right-hand column. And you're saying, oh, man, my parents owed $750 and the house only was $700. So what do we do? Okay, the first thing you want to do is see if you have an FHA insured reverse mortgage on the house. If you go to title and you get the deed of trust, if it's an FHA insured reverse mortgage, it'll say home equity conversion mortgage across the top. It will not say reverse mortgage. Why? If you make a payment on a reverse mortgage, do you have a reverse mortgage? No. So the government doesn't call it a reverse mortgage. They call it a home equity conversion mortgage. So as soon as you see that, you know you have an FHA insured reverse mortgage. So this puts you on this track. You say, okay, house is upside down. FHA says, okay, this is what we're going to do. You have an FHA insured reverse mortgage, which means we have mortgage insurance on it. Your parents have paid 0.5% annual to have this mortgage insurance. And now you might see some benefit. And this is the benefit. Your parents owed $750. The house is worth $700. We're going to let you pay us back $665 instead of the $750 your parents owed. In other words, FHA is going to write a check to the lender for $85,000. So they're going to make sure the heir can inherit that house with at least a 5% equity position. Why? Because FHA has put mortgage insurance on it. So they're like, hey, we're going to give you some of that back. FHA's done their math. I guess they don't think they'll have to do that too often. Otherwise, they probably would not do that. But for the heir that ends up on an upside down home, they're like, this is great. I don't have to worry about inheriting an upside down home as long as the reverse mortgage my parents decided to do was a government insured reverse mortgage called a home equity conversion mortgage. EM is the acronym we use in our industry. All right, so heirs, cool. You got the house. All you had to do was get a $665. The $750 number goes away, and now you continue on with your life. In California, by the time you paid $665, the house is probably worth $900. So there you go. You just did well. Well, maybe that won't be so much true going forward. But that's the idea. Make sense? All right, let's say that the heirs say, well, even though we're going to get a discount and FHA is going to pay the lender, we don't want the house. Okay, so this is how that works. As soon as we, the servicer or the lender, I use that interchangeably sometimes, sorry, I mean the same thing, servicer or lender. As soon as we learn that the last borrower has passed away in the house, we send a letter out to the heirs. It says, hey, heirs, we understand that the last remaining person has passed away. You have 30 days to get a hold of us. If we don't hear from you in 30 days, we will start foreclosure. So you better get a hold of us and tell us what you want to do. If the heirs say, we don't care, we're not going to get a hold of anybody, then we will send out an NOD after 30 days and say, you are on notice, you are in default. You have 90 days now. If you don't get a hold of us in 90 days, you know what can happen next. We will send out a notice of sale. And that gives you another 20 days. If you don't get a hold of us in that time frame, then the house could go to auction because we need to try to get our money back. So notice what happens here. The lender is never saying, we're taking the house. It's not ours. We have to go through foreclosure proceedings just like a regular lender would. Can we end up owning the house? Sure. Maybe no investor buys it at the auction, and now we have it as an REO. Okay, but we certainly in our industry do not want that to happen. One of the reasons our loan amounts are as low as they are is because if we have to foreclose on homes and no one buys them, we are terrible at getting them back on the market. We take a long time. The houses get damaged. Like, we got to pay for repairs. Like, our industry does not want these homes. That's why we're giving the heirs 12 months to get their act together, because we really want them to show up and get this house so we don't have the problem. Literally, our loan amounts have been lowered because we have been bad at foreclosure and not every heir shows up to get the house. And so we take a loss. So come and get the house, heirs, please. I'll help you where to get the heirs from. Yeah. Oh. No. Well, oh, okay. That's a good question. Let me get to that question in a second. Okay. She wants to know, how do we know who the heirs are? Right? Somewhere out of country? Yeah. Yeah. Mailing, we have a mail, we send the letter to the house where they lived. Because we would expect somebody to go to that house if people have passed away to get the mail. That's not the case. Servicer. We do have problems in our industry with that. Let me talk about that in just a second. Yes. How do we know? You're right. You don't have to. So I'm never told specifically how that happens because I'd start a company that would let people know how to get around giving up house to the reverse mortgage. No, I wouldn't do that. No, but the idea is that I believe, well, because when somebody dies in their county, it gets recorded at a county, right? So the county has record of people passing away. And Social Security needs to know about this. Why? Because they need to stop sending Social Security checks and providing benefits. So somewhere between the death certificate being filed and Social Security knowing about it, our industry has access to those things. Okay. We don't wait for the heirs to call and tell us. Because you know what happened then? The heirs be like, look, we're not going to call them. We're going to move in here for our lifetime. Right. Yeah. Social Security checks, anything else. So, yes. Oh, repeat the, oh, sorry, I'm not repeating questions for Zoomers. She asked, how do we know if someone has passed away in the house? And the answer is there are systems in between the recorder's office, Social Security, that we know that people have passed away. We're notified by agencies, by government agencies, not by the borrower, not by the borrowers or their kids, obviously. So we have to have a reliable source because otherwise sometimes nobody would tell us. All right, oh, so back to, let me finish the slide here. So the heir, let's say that the house upside down, they say, we don't care if we're getting it at 5% under market, we don't want it. We don't want to have it foreclosed on. So of course we can have you all short sell the property, okay? So that's what you would do, is you would short sell the property. So let's talk about where this all goes wrong at. You might have some experience with, okay? So this is what happens with reverse mortgages and heirs and foreclosures and selling and everything. Once we have learned that the borrower has passed away, there's only really 3 ways that we'll let the heirs talk to us. Number 1 is if we have a will on file, okay? Power of attorneys don't work because once you've passed away, power of attorneys go away. Letters or authorizations that you might have had on file with the servicers that worked when you were alive don't work anymore. So the only legal documents that will let us talk to an heir are a will, because what that does is nominate someone to be the run the estate, right? You have one person that has that power. A will does that. A living trust, or if the person is on title. Now, we used to not let kids on title, but about 6 or 7 years ago, we changed our policy. Or maybe it was about 5 years ago. We said, we'll let your kids go on title when you have a reverse mortgage. That way, if you want to try to avoid probate issues by doing that, go ahead. We're not saying that that's the best way to do it, but at least the heir is on title and then call up and go, yes, I'm on title for the house. And then we have to have communication with them because we know that they're owner and they were put on title when we were doing the loan. Okay, that's important because this is how this thing gets messed up. First of all, let's say somebody passes away with no trust. Okay, if they have no trust and no will, well, they call us up in that 30 days and they say, I got your letter. I'm ready to talk. And we're like, well, problem is we can't really talk to you. You're not on title and we have no documentation here for you. So we literally won't talk to them. We cannot release information at that point in time. So now they're stuck. They got a house that's going to probate. We're looking to foreclose because we want to get paid back and it gets really nasty. So we have to fix that one problem. What if a client put their house in a trust and the heirs are the beneficiary and successor trustee? Well, legally, they are in charge of the estate. So they call the servicer up and the servicer might say, that's great, you have a trust, but we still won't talk to you. And the kid's like, why? California says this is legal. Why won't we talk to them? Because they put the house in the trust after we did the loan. And we have not seen the trust. We have something inside of the note they signed that says they won't change title without proper notification. So now they've put themselves in a really strange situation there. What if there's no trust and no will, but the kids have put themselves on title? They've heard that, oh, I can go on title with a reverse mortgage. Okay. Did you do it beforehand when we were doing the loan? So it was done with a grant deed, which is insurable by a title company, so that way we know we're protected. Or did you do it by some quick claim later, which quick claims aren't worth much. They can be contested. So now we're like, did the parents really want to quit claim it to you? Like, so we have all these problems that happen when an heir calls because they got the letter thinking that we're ready to communicate with them. And then when they call us, we say, sorry, we know you got the letter, but we can't communicate with you. And the heir's like, what is going on here? You guys want the house? Is that this trick is? Well, no, we don't want the house at all. But we don't want to get in trouble giving the wrong information to the wrong person because lenders and servicers have been sued by kids who said, you talked to the wrong kid. So we don't want to get in that situation. So it's a melting pot out there of all kinds of problems, things with these loans, which is where there's opportunity, I believe, for you all. Whenever you run across the house or reverse mortgage, you need to just ask a few questions. You need to say, oh, great, you got a reverse mortgage. I know there's a specific set or a specific cadence that needs to be followed for your heirs to get control of this property right away when you pass away. Have you made sure that you're matching what your servicer wants? A lot of them are going to say no. Some of them might say, yes, I have a trust, which you still would say, when did you do that trust, before or after the loan? Some might say, my kids are on title. Oh, did you put them on title before the loan and the service? Because in order for a kid to go on title, when you get a reverse mortgage, they have to get counseled with the clients. So you can see problems abound for these heirs. And you asking a few questions should stimulate some activity. And they should asking you, oh, what do I need to do? And there you have them. Because you can call and ask me, or you can call the servicer with them and say, we want to make sure the heirs are set up properly. Like, we can be proactive now for the heirs to make sure that they got their ducks in a row. And when the heir knows that you're the one that's facilitated their ducks, so to speak, I believe you should get the listing out of that situation. So, for my young lady in the front row here, number one, they don't really know who the heirs are sometimes. So it's a process where they're going through to try to figure out who has the rights to this property. So when you're helping the servicer and the heir, you're helping them identify the proper heir. You can find reverse mortgages really easily. I have software I'll give you logins for. In fact, I do a video that shows you exactly how to find every house that has a reverse mortgage on it. If there's one on your street, that's a great place to start to make sure that that person has it dialed in properly, because you should get that listing now. You know it's a reverse mortgage. You know what to say to them. you should be getting that listing. All right. So if you have any questions on that, please get in touch with me. I want to make sure that you taking this class should make your interaction with anybody that has a reverse mortgage different than maybe it was before. All right, I'll talk more, a little bit more about that in a minute. Okay, let's just run through some things. Let's see how we've done today. Okay, does the government or bank own the home? Remember, we don't take ownership. We simply give a loan. As a result, we put a lien on title, put a deed of trust out there. Okay? That doesn't mean we own the home. It means that we just have the right to be paid back one day. Will the heirs lose appreciation? Can the heirs inherit the home? Well, we just learned they absolutely can. They can get up to a year to do that. But if they don't have their ducks in a row, then we can foreclose in about 140 days. We have 30 days when we send the letter. It says get a hold of us. If you don't get a hold of us in 30 days, we can issue a notice of default. That's 90 days. After that, we can issue a notice of sale, which is 20 days. It's 140 days if nobody does anything that we could foreclose. Or if the heirs don't have their paperwork in order, assuming that the servicer, the lender, is fast tracking, that heir could be in, in a tough situation pretty quick. But at the end of the day, we want them to get the house. We'll give them a year. They just have to do it. Okay, and then borrowers are always going to ask, okay? Sometimes I spend a long time with borrowers. Sometimes I have 3 or 4 appointments with the borrower. Sometimes the last question that they ask again before we do a loan is, okay, Ryan, so you're saying that if I get that statement every month, I never make a payment, my balance is way high, you're not going to send me something that is telling me I owe too much or I have to start making the payment or something like that? No, the answer is no. Remember, that's the deal with us. I'll never say how much you're going to owe because I don't know how much you borrowed. I don't know how long you've lived. But as long as you don't live right now, at least until what, 150, I'm going to say you're good. Okay, you can get foreclosed on with a reverse mortgage. Okay? So it's not all perfect. If somebody gets a reverse mortgage, you got to be there at least once a year. You can leave for 12 months, but we want you to get back, okay? So specifically, maybe if you're sick and you're gone in nursing home or hospital, we want you back in a year. We just don't want the house to continue to be vacant for longer than a year, okay? So you either got to refinance or sell the house after a year, assuming that we know. Sometimes we don't learn someone's gone until maybe they've been gone for 6 months. So it's a little bit of a guessing game for us. What we do is we send out something once a year that you fill out that says you're there. That's your occupancy certificate. When we get that back, we assume you're there. And then we don't bother you. All right? You're not supposed to rent out reverse mortgage homes. You can rent out rooms. I don't care if you rent out your rooms, but I still want you to have a room there. Our whole idea here is that we want the house to have an owner coming back to it to make sure it's okay. It's the only way we have of getting paid back one day is the house. So if an owner just rents it out and they're gone, it gets beat up, and then they pass away and no one pays the loan back, and we get this house that's been rented for 10 years and it's a complete disaster, and we're like, this is the only way we have to get paid back. We can't go back to the estate. So that's why we want it to be owner occupied, because studies have shown somebody that comes back to live in a house takes care of it or makes sure that it's just not in horrible shape. Okay, yes, we want to pay your property taxes, insurance, and HOA dues. Remember, if you are having a hard time qualifying for a loan, we may give you that life expectancy set aside or impound account, and we pay your tax insurance for you. So at that point in time, then you just got to worry about your HOA dues. Okay, so if you stop paying those and that HOA looks like they're going to start, I mean, it's rare that you see an HOA trying to foreclose. I don't know, but we have to get in front of that. If it looks like they're going to foreclose, we have to foreclose beforehand, so that way we make sure we get paid. So pay those things, though. If you don't pay those, you'll get a notice of default from us. We're in first position always. So we have to clear title before we give a reverse mortgage. So like if you have a solar lease, they have to remove themselves and come back on title. Or if you have hero loans, we got to pay those off because we all want to be in first position. Okay, the other way you get foreclosed on with a reverse mortgage, you just simply let your house get in such bad shape that somehow or another we've been notified. I mean, as of right now, I don't see people calling me and saying, Ryan, someone knocked on my door to ask me what my house looks like inside. So we have to be notified somehow this house is in really bad shape. Shingles are coming off it, maybe windows are broken. And then we will send out, our industry could send out someone to check on the house. It's a health and safety issue. We don't want someone living in a house that looks like it's going to have problems, right? So how do you know if your house does not meet our standards? Well, you could go online and look at the FHA standards book, which I don't recommend doing just because it's long. Instead, I tell people, when you got your reverse mortgage, we had an FHA approved appraiser say that your house met standards. So keep it in that condition. And then you know you're good. Because otherwise, it could be a guessing game. So that's how you get foreclosed on with a reverse mortgage. It can happen. If your house is not maintained to the point that somehow we've been notified, because like I said, I don't know that we go out and check at this point in time, but hey, you know the way technology is nowadays. Some kind of a chat bot check your house thing is going to come and see if your house is okay. But right now, I have never had a client call me in 15 years and say, I was notified my house did not meet standards. Okay. All right. So how much can your client get on a purchase or a refinance? I've said that our loan amounts change based on interest rates, ages, and value. So you'd be guessing at any point in time because it changes weekly, right? So you can download that app if you want to go to the your Google Play Store for your Android users or your iPhone users. You go to your app store, you type in REV, the number 4 PUR, and our app will come up. And then I adjust it once a week. So I physically go in, depending on what rates they're going to do for that week, and I will adjust the reverse mortgage loan proceeds. You put the value of the house in there, you put the age of the clients, and you hit calculate, and it'll tell you the loan amount. And the loan amount is basically the same on a purchase or a refinance, okay? If you're married and you want a reverse mortgage, I only have to have one of you over 62. That changed. I used to say that you both had to be over 62 to get a reverse mortgage. That was like a long time ago. Now I simply say, are you married and is at least one of you over 62? I will give you a reverse mortgage and I will protect both of you, which was different than how it used to be. If somebody maybe 10 years ago, let's say, about 10 years ago, got a reverse mortgage and their spouse is under 62, I'd say I could do the reverse mortgage on the person that's 62 or older and the younger one is just living there. So if something happens to the older one, the younger one is going to get the letter one day and says you have to either refinance or sell the house. Okay, we don't do that anymore. Obviously, that wasn't a very good idea to be foreclosing on a 90-year-old. That's not a great plan. Okay, so what we said is, look, we don't care as long as you're married. Now, along with that goes means the younger your spouse is, remember, we lend money based on age. So if you got that young spouse that you thought was, you know, that you did something for, whatever it was, you're going to get a lower loan amount. Okay, so is anybody single in here? I'm telling you to marry an older person. If you ever want a reverse mortgage. Okay, that's sound advice to marry older, at least from a reverse mortgage loan officer's perspective. Okay, if you're not married and you want to do a reverse mortgage with somebody, you can still do that, but you all got to be over 62 if you want to get on the loan. Once again, marriage is the key. Okay, FHA said, Ryan, we are not into insuring big giant reverse mortgage loans. So how do we assure that we don't do that? Well, FHA puts caps on the value they'll allow us to use. Now, somebody that has a house that's worth 1.5 million or buying a house worth 1.5 million, I'll still give them a government insured reverse mortgage, but I'm not going to lend them any more money than I would to somebody that has a house that's worth $1,089,000. They just have to put down what, like $500,000 more. So the idea is if you're going to be wanting to get a reverse mortgage, a government insured style, you probably want to do something 1.1 million or less. That's going to give you the maximum loan amount that FHA allows us to have, okay? Could we do a government insured reverse mortgage on a $10 million home? Sure. You're probably going to get $500,000. That doesn't seem like that great of a deal on a $10 million home. But on a $1 million home, a $500,000 seems pretty good. It's just that FHA says, we're not going to insure these big loans. So what do we do? Well, the private industry has a loan that we can do. If the value of the house is worth about 1.3 million or more, the private industry has loans that we could use and they will allow us to use the full value. So now if you have a $10 million home, yeah, I could get you maybe $4 million on a reverse mortgage. It's just not the government insured version. And so your rates are going to be higher. Let's cover rates real quick. Non-government insured reverse mortgages. There's quite a few of them out there. All their rates are about 10% right now. So they're a little higher. They used to be 5%. So rates have gone up a lot on those non-government reverse mortgages, but they're still available. A government insured reverse mortgage, which is called the HECM, remember, home equity conversion mortgage. Those rates are about 7.5%. They're about what normal loans are, okay? You have a 0.5% annual mortgage insurance you have to add to that. Upfront mortgage insurance, which is 2% of the value of the home. When it's valued at $1 million or less, we take about 2%. So your FHA insured reverse mortgages are a lot like your regular FHA loans. You have upfront mortgage insurance and you have annual. Otherwise, the rates are about the same as your normal loans. We have a fixed or an adjustable. I'm about a minute over, by the way. Thanks for hanging in with me. Your adjustable rate reverses. Would you think that's more popular than the fixed? I'm trying to get tricky here. Okay, about 80 to 90% of the loans that are done right now are adjustable rate reverse mortgages. And that's typically because you can get more money on them. And you have the equity line feature. So more people are like, well, I need more money. I'm less concerned about the rate moving around because I don't have to make a payment. I want the cash. So they'll take a equity line style reverse mortgage. All right, final slide, and then we'll get out of here. Remember, these heirs, when they inherit the home, they're selling the homes. So you can use the software. I'll give you logins for in just a second. You find houses with reverse mortgages on there, make sure you know the heirs, and make sure you're helping the heirs inherit the home so you get that listing. I'm not saying you get a bunch of listings tomorrow by doing this, but whenever you run into a person with a reverse mortgage, you want to ask the question, are your heirs set up to inherit the house properly? Because reverse mortgages can be a pain in the butt to get control of. Let's make sure your heirs don't have that problem, and then you get that listing when that happens. Here's the other thing with reverse mortgages. Hold on, I'll make that point in a second. Okay, the cost of living adjustment on Social Security is not the same as inflation has been. I can tell you that. So our older homeowners are getting squeezed. It's a lot tougher to make it buying that same fixed income. So this is why, even though our volume is down on reverse mortgages because rates are up, right? We're giving less loans out. That doesn't mean our activity level is down. I have just as many people, if not more, wanting reverse mortgages because they need cash, but I'm giving out a lot less of them. So our older homeowners are just feeling a pinch right now. That means for you, there's a good chance they might need to sell. Okay, and then the people that wanted to refinance, this is another reason why you want to keep track of people with reverse mortgages. Just because they have a reverse mortgage doesn't mean that everything is awesome. Sometimes they need more cash and they can't refinance right now because the market's not there for them to refinance. So even though they may have no mortgage payment, you may find that they still need to sell that house to get more money. And remember the reverse purchase? So, hey, client, you have a reverse mortgage right now. Let's just say they're telling you you're tight on cash. How about if we get you a reverse mortgage, you have more money, we'll just do it in a different house. You got to go for a little lower priced home, and then you do the reverse purchase. Because dropping down from the higher to the lower priced home releases equity to them, but they still end up a home with a reverse mortgage, okay? So you got to ask these questions. The reason why I want you to ask the questions is because I'm getting these calls of people with reverse mortgages, and I'm like, I can't refinance you. And they're like, what am I going to do? Maybe you need to downsize. Okay, I'll do that. So it's out there. Okay. If you're interested in, number one, I've written a lot of stuff for the last 15 years. These are some newsletters that you're welcome to download off my website. On my website, you can actually put your name on them and make them your newsletter, okay? I give you permission to take my work gladly. What they are is these are articles that are written that speak to a homeowner that thinks I'm tight on cash and I might have to sell. Hopefully this will take a little off of your plate. Instead of having to go through the whole thing with them, if you just want to hand them this flyer, the articles are about things that they're thinking about. Can I transfer my taxes? Will I have to pay capital gains on this house? Reverse purchase. Of course, I got my advertisement in there. How about, should I take an all cash offer instead of hiring a realtor, right? Hopefully, no, that's not a good thing. We want you to get the thing on the market, get as much money as you can. So I've written these articles, and you can just give them out to somebody who you think might be an older homeowner that's kind of thinking about it, and then your name's on it. See if they say, hey, that was an interesting article you wrote. I actually was thinking about that, right? So you can grab those off my website. I'll give you logins. Leave your cards with me, or I have a sign-in sheet that I did not pass around. You can put your email down, and I'll send you logins to the website. Because also what I have on the website are logins for this thing called Title Pro 24/7. What do you do with that? You may have seen this software, but I manipulate it to try to figure out which older homeowner is going to need to sell their home. I take, and you can watch the short videos I do. I show you how to log in. I show you how to check the boxes. And what am I looking for? I'm looking for people for you that are in your area that might be sweating right now. They're tight on cash. They have some equity, and they're like, I got to do something. Why would you want to know that? Well, geez, that might be the person on your street that's older that needs to sell. Then throw a newsletter on their door. In the video, I actually knock on the door because I have fun with that. I pull the data. You can watch, do the same thing I do, except stop short of what I do if you don't want to knock on the door and say, hey, are you really broke? You don't want to do that, right? I did it just to see see if I was right. You can just leave newsletters and have some fun. All this stuff I do is just, you guys can have fun with it, but it might kick you out a owner that needs to do something. The one video I did, I went to 3 doors that I pulled from the software, and the 3rd door I knocked on, person was legitimately possibly going to list their home from the data I put in there. What did I put in there? I think in that round, I put 70 years and older, still had a mortgage payment, and had a tax default, property tax default. Okay, that's a recipe for disaster. Okay, so those are early indicators that somebody might need to do something. And so since they're older, I'm giving them a flyer about reverse purchase loans. Yes. Yes. For those of you on the Zoom that have to go, I ran 5 minutes long. Thank you for being here. If you throw your email, if you have questions, I'll start getting to them right now. I'll give you the logins for the software that show you how to have fun with this stuff. I actually do the videos myself where I'm clicking buttons. I'm getting in the car. I'm trying to turn soil to see if there's listings out there. I don't want the listings, but I want you to get them. So then maybe I can get a loan, but we all have fun with that. So for you others of you who have to leave, thank you. Leave your information. Back to your question. Okay, so we can do reverse mortgage at 55 years and older, even if you don't have someone over 62. But that is the non-government product that we use for that. So the loan amounts are going to be more conservative on a lower priced property. On a higher priced property to work. So yes, but that's an interesting question. Yes, I'm thinking about a question. So how do we as an industry make money on a reverse mortgage if our interest rates are the same as regular loans, right? Well, okay, government insured reverse mortgage, it's FHA insured, right? So that's why we're giving about the same rates as normal loans, because we know that nothing's going to go wrong. We're going to get paid no matter what, because FHA is insuring the loan. So that's why we're willing to give rates that are about what the same as a regular loan is, because it's a sure bet for us. We're going to get paid back, so we're willing to give about the same rates, right? And remember, the longer a person has a reverse mortgage, it's better than a regular loan as far as we're concerned, because you have compounding interest the longer they have the loan. So that's why we're willing. That's right. That's why we're willing to wait, because we know the longer they have the loan, the bigger the payday. And since FHA is insuring it, we know we will get paid. That's why we're willing to offer the same rates roughly as a regular loan. Now, they're not always in parity. Sometimes we're going to be higher than the market rate, like a 30-year fix. Sometimes they'll be lower because our rates move based on different indexes. We're not betting on appreciation because FHA, the question was us making money. We're betting on appreciation. We're not. The government is, right? Because FHA has to cover us if we lose, right? So we don't care if the house appreciates, believe it or not. Yeah, now the non-FHA loan cares very much about appreciation because they're not insured by the government. That's also why their interest rates are going to be higher too, because they don't have anybody that has their back. So a non-FHA reverse mortgage, if the house goes upside down, they lose. In California, it's a non-recourse state. So even if FHA is not paying back that lender on a non-FHA loan, they cannot go after the client. So that's why they're a little more hyper-focused on charging a higher rate, in my opinion, because they're spreading risk across their portfolio to make more money on loans. That way, if something does go wrong, they've covered their bets. Okay, that's a... Yeah, but okay, so most of the reverse mortgages out there are the home equity conversion mortgage. Okay, that's an FHA insured loan. And those are the ones you're going to get the better rates on. Those are the ones that have that 95% rule for the heirs to be able to inherit the home without it being upside down. That's the government-insured reverse mortgage. Okay, that's the majority of them being done. Okay, so anyways, you guys are welcome to leave your information, log in, check out the website, call and bother me. On the website, there's all kinds of refresher stuff in case you don't want to take the course again, but you have any questions. The only thing I want you to remember from this class, the only thing you can remember, it's fine with me, is that when you see or hear reverse mortgage, you got to think of it differently than just a loan. I tell you, I spend more time talking about solutions that might not be reverse mortgage these days than reverse mortgages, because homeowners are trying to figure out how to do something. And since my loan amounts are down right now, not everyone is going to get that loan, and they got to figure out a different solution. That solution might be to sell. That's what you're there for. The solution for somebody that has a reverse mortgage might be that they have to sell because they maybe need more money. So just think about reverse mortgage in different, it's not about just someone getting a loan anymore. They're letting you know, I'm trying to figure out a situation and you might need to help me. Okay. All right. So thank you for your time today. We ran over. Thank you. Are there questions on the Zoom? Are there any questions I missed on Zoom?
Yes.
Okay.
No more. Thank you. Okay. By the way, on behalf of West and Gabriel Valley Realtors, many thanks to Ryan's presentation today.
Thank you.
And there are many upcoming classes, seminars. Please do sign up and attend. Okay, like tomorrow, the 18th, the Supra website training, and on the 24th, Supra E-Key basic training. And on November 2nd, that's the basic one you have to register. It is for Broker Summit, the whole day seminar from 10:30 to 4, and lunch is served. So please do register. So many thanks.
Thank you.
Yeah.
All right. Very nice.
For our appreciation.
All right. Cool.
Will you